Central banks around the world are pumping money into the system, but even with unlimited currency, they seem to be doing something quite the opposite, buying into a traditional asset, gold. Despite helicopter Ben Bernanke's assertion that gold is not money and that central banks buy gold as a tradition only, there's clearly more going on. Simultaneously, massive levels of cash are being hoarded, potentially as a result of the questionable scenarios in which we live through today. Certainty is seriously lacking, and no activity from a central bank is going to fix that. You came here for the truth, so let me unveil that for you. Today we're going to talk about what's happening in the financial system. I'm going to cover various topics today. In fact, I want to look at what's going on with auto loans. I want to talk to you about the auto industry in general. I want to talk about debt. I want to talk about China. I want to look at several things that are all integrated into the global economy, and we'll piece some of those together. Let's begin. The world's cash is disappearing. Bankers aren't sure where it went. This is an article out of the Wall Street Journal that is very good. It gets into specific examples, and I was going to really dig deep on this particular one, getting into a lot of what this is all about, but I think it's important for people to read the whole thing because it would just take me forever to break it all down. Essentially, we have individuals all over the place that are piling up cash. A lot of this, it is believed, it is speculated that the 1% is basically taking cash and putting it in different places around the world as a result of what we have seen with the uncertainty and with the knowing that it's probably better to lose some on the inflation than to actually invest it in what has been an overstimulated and saturated market, whether that's stocks or bonds or real estate or anywhere else. They just wanted in cash to be safe and what they think is safe. So some people are burying it, some people are putting in safe deposit boxes. It's pretty much going everywhere at this time. This article gives you several examples of where that is. Check your pockets. Society is increasingly going cashless, but banknotes are more in demand. Bankers search for clues. That's the way this works. You try to go cashless, you try to push things in a certain way, but there is a group that will not accept it. And we have been seeing that a lot. There's been a pushback against the cashless society, but it's definitely going in that direction, particularly for the younger individuals. It will be interesting to see what happens in the next crisis with regards to this specifically. Central bank purchases are set to reach record high this year due to geopolitical tensions. We're of course looking at the gold purchases, and you can see what has happened from January to October 2018 and then January to October 2019, and obviously there has been massive growth when you look at this. The dark blue areas are the countries with geopolitical tensions with the US or the EU, and there is clearly a desire for these countries, whether it's China or Russia and so on, to buy more and more gold. And then you see the others not exactly growing. In fact, it has shrunk. When you look at a country like Canada getting rid of their gold, you see what the UK has done. Many other countries have decided that gold is a relic. Let's put it off. Why bother? We got a printing press. The Federal Reserve will print us some in the next crisis, just as they did in the financial crisis. So we don't need that. And then other central banks are saying this is a good way to diversify out of the US dollar and buy into something else. Like I said, they have a printing press. They can print as much of their currency as they want, and yet they're buying gold. It's actually the complete opposite. And there are different reasons for this. There's not one answer for that, but I just wanted to show you this statistically on here, and you can make those judgments for yourself. China suffers biggest dollar bond default by state-owned company in 2 decades. I found this and just threw it in this moment here simply because China is one of the big buyers of gold, and just wanted to connect that in with what's happening because we see that debt is a very serious problem. The central banks created a system that is based around that, and then you have the failures that keep happening. A lot of them are in China certainly, but we do see bank failures all over the world. That's no fault of China specifically, but they have been dealing with some major issues in their financial system. A major Chinese commodities trader became the biggest dollar bond defaulter among the nation's state-owned companies in 2 decades, a moment of reckoning for Beijing as it struggles to contain credit risk in a weakening economy. The details of this obviously are in the article if you want to check it out, but I just wanted to bring the fragility to the table here, show you what's going on. Defaults by China's state-owned firms climbed to a record high level in 2019. Appears to be approximately 20 billion. The yearly onshore bond defaults by state-owned firms. To me, this is significant, even though if we look at it on a global scale, sure, fine, they're most of the companies, they're still there, they're able to survive and so on. But we do see trends, and it's important to point them out where they are. So we talk about cash, we talk about gold, and what about diamonds? Diamond crisis gets worse for global giant De Beers. And you can see this particular company, they're so massive. They have a complete hold over the diamond mining, and you probably know the stories about this company. But they actually had to slash their prices, which I found interesting because this is one commodity that had been going up year over year over year for the most part. You never hear of a diamond being cheaper in price. Now things have certainly changed. Is there necessarily less of a desire for luxury goods today? Is it something to do with what's happening in the diamond market itself? That could be part of it, but De Beers also has their hand in that, and I'm talking about the artificially created diamonds. So there's something really strange going on with the diamond industry, and I'll bring you more details as I find that. So we had cash, we had gold, we got diamonds, and everybody's favorite, the credit card. Americans are projected to fall seriously behind on their credit card bills at the highest rate in a decade as banks push a record number of people to get plastic. What we're looking at is the share of credit card borrowers who are at least 90 days past due on their accounts will probably tick up to 2% next year, the highest level since 2010. And I know what some people might think. Well, 2%, it's a very low number, nothing to worry about. But of course it is, because when you see that's 2% of the people and they're holding on to a massive quantity of debt, at the same time, their home values are at the highest they have been in years. They're pulling money out, home equity line of credit. They are getting all different types of debt, and yet still they can't make their payments. There's a lot going on here, of course, with student debt, and that is a bigger issue. It's a bigger chunk as well. A lot of people aren't using their student loans to pay for their school. Maybe it started that way, but of course it snowballed. We got some serious issues. This is well managed delinquency, so you don't have to worry about it. It's still healthy. This uptick is not concerning with the amount of credit that has been expanding. Wow, that's fantastic. Doesn't it seem that way? I mean, it's well managed. The delinquency is well managed. When I see this type of information, you get these people in the financial industry that read that and actually take it in as a fact. They bring it up in the boardroom meetings, on the trader desks. They're talking about this type of information, how things look great, U3 unemployment rate, and a whole bunch of other garbage. And it just makes me want to puke. The number of people with access to revolving credit reached a record 200 million in the third quarter. We have people of all ages getting credit cards, piling up the maximum they can, and then paying the minimum. And these people are not delinquent. That's what we need to understand. They are paying the absolute minimum. They carry the balance constantly. And sure, the vast majority of people, they're paying their bills. Everything is fine. But a growing number of them are only able to pay the minimum, or let's say more, are keeping a balance. And that to me presents a big issue, because the credit card rates right now are insane. On average, 17%. If you go to some places, you're going to see maybe 24%. I mean, it all depends if it's a department store and what type of credit card we're talking about here. It also depends on your particular credit rating. So of course, the worse your credit rating is, the higher the interest is going to be. And these are the type of people that create that cascading effect when they start going bankrupt, when they become delinquent on their debt. This is a huge issue that always becomes worse as time goes on. This is about the auto market. Global auto sales by market, trailing 12 months, all around the world. You can see the different places here. I'm not going to break it all down, just showing you the fact that this has definitely rolled over. The peak was back, let's say around the beginning of 2018, and it has been declining ever since, along with so many other indicators that I have shown you. Take a look at this. None are looking up. Auto sales by market trailing 12 months broken down in this Bloomberg chart. It's the same story. Over and over and over again, we see the same activities taking place. There is a global slowdown that might reverse because of this trade deal. The only problem with that trade deal is that there isn't one yet. Everyone is down, auto sales by country, trailing 12 months in the millions of vehicles. Take a look at this. No matter how you put this on a chart, it looks bad. I keep hearing about this real ridiculous notion that, well, they're going to electric vehicles and that's why they're losing so many jobs. That's why they're closing factories. That's why people aren't buying cars today. Oh, they're turning this particular factory into an electric vehicle manufacturing, and that's why the industry is looking really bad right now, but it's going to look fantastic next year or 2 years or 5 years. I don't know about you, but drive down the street and electric vehicles represent a very small minority of the total. And I'm thinking in the next, let's say 1 or 2 or 3 years, that's probably not going to change much. So when I hear that type of information, it simply is not true. Bad news keeps coming for the global auto market. This talks about how they're creating this new plant and everything's going to be fantastic because they're hiring people. But look at this paragraph here. Global auto sales peaked 2 years ago at a bit under 86 million on a trailing 12-month basis. In October, sales were only 78 million. That's a decline of almost 9%. We are seeing the exact same thing all around the world, and there is no way to sugarcoat it. Global airlines cut 2019 profit forecast over trade tensions. They want to blame what's going on with the trade tensions, but things have certainly changed in this industry as well. So whether you look at what's going on in the consumer vehicles, the automotive industry, we are seeing the same thing for the global airlines. We see all different types of freight that have slowed down dramatically. That's land, sea, and air. All of them are showing weakness. You add on top of that what we talked about at the beginning of this video, there's something going on here underlying all of it, and there's no other way to put it. Really quickly, in 2018, buyback surged to levels well above those implied by earnings as a consequence of the corporate tax cut and the reform. They have been trending lower over the last 2 quarters. So you might read that and think, okay, whatever, not a big deal. But take a look at this. The green line is net buybacks, and then the blue line, that's earnings. And we find something interesting, that when this becomes a little too excessive, those net buybacks, we tend to have a recession that follows. And you look at this all the time. They get a little bit over their heads and we find that earnings slip down and we encounter some serious issues. Now, whether that is necessarily going to be the problem this time around, nobody knows, but it's just one more indicator to add to the pile. Last but not least, deficit spikes 12% in the first 2 months of fiscal year. We have watched this growing and growing and growing, and quite frankly, nobody gives a damn. There is a massive hole that is created in the government and nobody is ever going to repair it. What the central banks do is not going to fix it, even though they've monetized, I believe, something like 90% of all the issuance of debt from the government. The Federal Reserve cannot continue doing this indefinitely. Eventually, the money will become confetti. If you found this video informative, hit that thumbs up button. When you push that button, you support this channel. If you want to build a business, if you want to learn how to make money online, check out my free e-course. 100% free, no catch, theamazongps.com. If you want to understand the financial system really at its root, if you want to be able to disclose any piece of information to your friends, your families, your coworkers, and have a really good grasp of what's going on, these 2 books get into all of that information. Check it out at the link in the description. If you want the audiobook, themoneygps.com. Hold on, hang on. Have you seen this video? I get into a lot of info I think will be very important to you. So click on it and I will see you there.